In today's economy, more people than ever are looking to buy and sell businesses. But how do you do it? Welcome to the Deal Board, presented by Transworld Business Advisors. Straight talk about real deals and real people. Listen to stories, interviews, and expert advice to help your business sale, merger, or acquisition process. Now, here are your business exit experts, Andy and JT.
Greetings, everybody, and welcome to the Transworld Deal Board podcast. And today, the topic is SBA financing and how sellers can be prepared to get their deal pre-qualified and what brokers can do to help the seller not only get it pre-qualified, but to look for all the landmines that could come out and sabotage that deal. And we're joined today with Andy Cagnetta,
Tammy Roberts,
and John Wahl
from Live Oak Bank. So
Yes.
We've got a great episode. Stay tuned. You don't want to miss a beat. So let's talk about SBA financing, because you guys are experts in the SBA field and getting those businesses pre-qualified. What do we need to be educating our sellers on? What do they need to do to make sure that their business is going to get the gold seal of approval? Okay, so that when they bring the right buyer, and that broker brings the right buyer along, we know we can get that deal across the finish line. Where do you want to start?
I'll kick it off. And I think it's a great question to be able to prepare sellers on what to expect throughout the process. And everyone's going to probably have a few, but my top request from sellers in order to pre-qualify their listing with your brokers is clean financials.
Good.
And current financials. So, it's really difficult when they have a large expense or income item that says, ask my CPA, and they don't know what that is.
Right.
It's tough if they don't have a balance sheet or don't have one that matches their P&L statements. So, being able to prepare and have tax returns filed within the last year. We're halfway through 2026 almost.
That's right.
So want to see those 2025 filed tax returns.
Okay.
And want to see clean P&L and balance sheets within the last 60 days.
Okay.
And I think the really important also addition to that is having a comparable statements for the same period prior year. So I would put financials at the top of my list. Tammy?
Yeah.
I would definitely say that they take a good look at their customers to make sure that there's not any customer concentrations that they are potentially unaware of.
Okay.
We look at a certain percentage.
What is that percentage, Tammy? What do you think?
Anything over 25%
Okay.
is where, we start to want to try to mitigate some of that risk. They may not be aware that they have a customer concentration today, but when they start looking at their customer list,
Right.
they might be able to see that. So maybe taking a look at their list of customers to see if they have that.
And in that case, you don't want any one particular customer being higher than that percentage.
That's
Is that right?
correct.
Okay,
Mhm.
gotcha. Yeah.
For sure. Or even a vendor could be a potential issue that, we would want to dig into a little bit. So just looking at their vendors and their customers, I think is a great start too.
And John, is it fair to say that when you get further into the process, right, and we have a buyer and now we're going through underwriting, et cetera, that they're still going to need to be able to provide to you current financials as this deal progresses? As you get a month or 2 months in, they can't, in your example, it's June, so we're going to take April, but we're going to need new ones.
To every seller that's listening or watching this, don't take your foot off the gas.
That's right.
Super important, because it's likely that we're going to need to have updated financials as the process goes through. The buyer's also going to want to see that. The buyer's counsel,
Sure.
their CPA, they're going to want to see those as well to make sure that there's not been any deterioration since this process started. So,
Because you don't think sellers take their foot off the gas with I'm for sale now.
I think, dreams of palm trees and oceans and Hawaii or Florida,
Right,
it
right,
does
right.
definitely happen.
Yes.
So,
Okay.
yeah.
So the advice is keep your foot on the gas. In fact, if you can not just keep it on the gas, but if you can continue to build it, it's even a better position to put the business in.
Absolutely. And I think from a financing standpoint, it's important, but also when we send out and get the valuation from a third party, they're going to look at how is that company performing recently as heavily weighted in that valuation process.
And what would you say to the business seller who's got an accountant that's giving them the value? Andy, has that ever happened to you? When my accountant said it's worth this, but then the SBA lender comes back and goes, well.
Yeah, I mean, I think there's sometimes a lot of accountants, they're very sophisticated. They went to business school somewhere and they think that every business is worth 5 times EBITDA.
Right.
And they don't understand what EBITDA is. They start adding all the things that they think are EBITDA into what is basically seller's discretionary earnings.
Okay.
And a lot of times the banks are not going to accept all those things. Back to what John said earlier, current financials, clean financials includes making sure that they can find the profit or find the depreciation and interest. And John, just to piggyback on what you're saying, here we are halfway through a year, which typically a lot of people file for extension, right? So now we don't have tax returns for the last 18 months. And a lot of times those interim financials don't include things that Tammy was referring to, like what is my customer mix right now? Am I up to date on my payroll taxes and payroll tax returns? Do I have a current inventory or a current work in progress? I think part of the message is not only does your P&L and balance sheet have to be in shape, you have to know what's behind all that too.
Because a lot of times even depreciation doesn't get entered into the account
Right.
later on in the year or at the end of the year.
Yeah.
Yeah.
Because the accounts are making big adjustments.
Yeah.
If they
That's
do
right.
an inventory, if they're not doing an inventory, they're only doing it once a year.
Right.
And things change drastically.
Yeah.
Maybe business explodes or they order a bunch of things and, things could really be off in a set of QuickBooks that's not professionally looked at.
Okay. And when you were talking about some of those add backs, the things that the accountant's going to want to put in there, what types of things would you be saying, we can accept that, but we don't want to know about the blow dryer and the comb that you got at Walmart?
Yeah, I think what's most important is being able to tell the story and being able to support that story with documentation.
Okay.
So as we tell buyers is that there is a lot of benefits in buying these businesses when you look at SDE versus EBITDA. Some of that might be the car insurance, the cell phone bill, health insurance, some of these travel, entertainment, small items that they're still going to be able to benefit from, but likely going to expense those in the business going forward at the CPA's advice to minimize their taxable income. So when we look at add backs, we typically like to narrow those down to one-time add backs that you can support, you can justify, that are outside of EBITDA, that are not going to be carry forward expenses on the buyer
And the
side
buyer
of
is not
things.
going to have that again.
Yeah.
Tammy,
fair.
Tammy, how would you look at some of the add backs like health insurance and car insurance? Because the next buyer is going to have those things too, right?
Yeah, like for health insurance, for example, I'll usually ask, do you have a spouse that currently carries your health insurance?
Okay.
Oh, okay.
Because in that case, yeah, you're likely not going to have that health insurance expense, right? So ask a little bit about the outside piece that comes along with the buyer, whether it's spouse or some different insurance that they might have, car insurance for the same thing. What do you have for car insurance now? Do you intend to run that through the business like the seller is? And I think that knowing all of those add backs that the seller is currently, whether the bank can use them or not, is very important for the buyer to understand, because they are getting a true sense of what the profitability of the company is by knowing all of those things. Unfortunately, the bank can't use all of those things. So we have to, back to your point, to documentation. No one is piecing 3 years of Olive Garden receipts together to, go through meals and entertainment to discover if it truly was a business dinner or a personal dinner.
Right.
And so being able to work through that documentation, again, to your point, is key.
Yeah.
Because what banks want to look for is they want to look for available free cash flow to repay
To service the debt.
Yeah,
Yeah, sure.
I mean, that's what it boils down to.
Right.
So if that expense is still there, it's not going to be new cash flow available to service.
So let's say a seller does all these things.
Okay.
Let's talk about the next step of actually getting it pre-qualified. Why do you like to do that?
I think one, it provides a larger audience that can qualify for that business, knowing that financing is available.
When you bring it to market, a
When you-
broader net for
Yeah,
buyers. Okay. Yeah.
When you
good.
bring it to market, before you bring it to market, it helps to possibly spell out some things that might need to be cleaned up if there's enough time. I think timing is always important. Sellers may want to sell within 6 months and may not have a lot of time to not use their company as their personal piggy bank, versus if they have time and they come to your team early, it can help clean that up. And a lot of the time, the cleaner the company is, the better the EBITDA is going to perform. And then it's up to the valuation of what that multiple on EBITDA is going to be. So it provides pre-qualified businesses, provide a larger audience of buyers, I believe.
And I think
in my
another thing, Andy,
experience.
that happens is, when you do have certain things that maybe you're not showing as well, and the EBIT is not as strong, then you're going to be more likely to have to entertain a seller financing component because the bank's only going to lend up to a certain amount. So if you can show that all that profit really is there, that's a better position to be in. You may not have to carry a note at all.
And it may be the perfect time to figure out, are there going to be eligibility hurdles with SBA financing that you may need to overcome? Maybe it's an industry that the SBA doesn't finance in. Maybe it's a heavy cash business where you can't substantiate that on tax returns.
Right.
Maybe, there's a handful of other
Licensing
reasons.
issues.
But yeah,
Licensing, yep. Licensing is a big one right now with how popular the trades are amongst buyers.
Yeah.
And so also in the pre-screening or the pre-qualifying, does the experience of the buyer enter in at that stage of the game? Or how are you using that as you're thinking about what can I finance? Are you considering that?
Yeah, I think it depends on what the type of business is, to your point, to licensing and what type of buyer will be able to get the financing.
Okay.
So I think part of our process too is to let you know when we're pre-qualifying a business for you, what types of buyers would qualify for
that.
financing that type of
That's
business.
great.
So that helps in your marketing efforts as well. I think also too, it will help you understand the structure of how we would structure it in order to get the highest probability of success in financing. And when you're bringing that to market, your buyers already know that. And you can set the expectations with your sellers as well. If there is going to be some note that needs to be in there for some purpose, might be licensing or transition.
And one thing that's been kind of interesting in the last couple of years is this concept of a partial buy-in.
Yeah.
To be able to mitigate, be it concentration, key employees, or licensing, is the ability of a buyer to come in and buy a portion through a stock acquisition of a company. So that's something that has a benefit the SBA's came out with the last couple of years to help encourage those transfers of businesses that otherwise might be difficult
And
to
talk
transfer.
to that point a little bit more detail, John. What are you seeing that is acceptable, or what kind of structure could a seller go, oh, I would be interested in that. I don't necessarily have to sell the whole thing.
Yeah, I think the concept of being able to take most of the chips off the table is
sure.
where this comes to, and still have a continuation plan. So what we've typically seen is that a buyer would come in and purchase 80+% of the company.
Okay.
If the seller keeps less than 20%, they don't have to pledge personal collateral. They do, however, and this is really key, have to provide a guarantee, a personal financial guarantee on that SBA debt.
On the whole debt.
On the whole debt
Got
for
it.
the next 2 years,
Okay.
assuming that payments are made on time for at least 12 consecutive months. So it is a risk reward balance, but as sellers are preparing, that's something to have a conversation. I mean, it's kind of a little bit in lieu of maybe carrying debt where you don't have repayment on that.
Right.
So.
Right.
We've seen that in some of the big contractors, right? Something like a roofing contractor, or somebody's moving. They might even have an experience, but it takes a couple of years to get the license.
Yep.
So that could be helpful.
Yeah, absolutely.
At Transworld Business Advisors, we help entrepreneurs buy and sell businesses every day with over 1,000 expert brokers around the world. Want to learn how it works? Head to tworld.com or give us a call at 800-205-7605.
Hey JT, do you know what time it is?
Money time?
Almost. It's time for listing of the week.
Good afternoon, Deal Board. I wanted to present to you my spinal implant manufacturing business, also a technology company. It does include 4 patents and a 510(k) FDA approval. My understanding is that takes 2+ years to even achieve, so that will come along with it. It's a great business. It's pedigree screws and cross connectors. And what also is great is that the management team, engineering team, product development, physician support is all in place also. And then also if they need front of the house support, office support between inventory control, payroll, compliance, risk management, legal, patent maintenance, things like that, that's all available also. The owner is willing to stay on for 2 to 3 months. If you want him on longer as a consultant, he will. It will include over $600,000 in inventory. The margins are very high on this, somewhere between 60 and 70% are the margins. It used to be a $10 million company. He's let, as the doctors have retired, he has not gone after additional doctors. He's kind of let it go. Wasn't really thinking about selling it and realized that might be the potential and that he didn't want to let those patents just go. So we're taking offers until the middle of June for this business. Like I said, he's got a lot in place for it. And we're probably looking for a strategic buyer that maybe wouldn't need all of that, especially the front office support or maybe even the back office support. We're looking for someone that has access to spine surgeons. So any distributors or direct sales people that are in that field would be great candidates. They would need that whole support system. But if a larger company decided to buy this, then they may not need all that. And it's very flexible. It is located here in the state of Texas. However, it is relocatable. He's got surgeons in other parts of the country. So let me know if you are or you know someone that might be interested in this business. Again, spinal implant manufacturing business with pedicle screws and cross connectors. He does have other inventory that would be included also. My name is Linda Boswell, and I am with Transworld Business Advisors Prosper of the Dallas-Fort Worth area. My phone number is 817-755-1026, and I could be reached at lboswell@tworld.com. Thanks so much. Have a beautiful day.
All right. So there is some question about the right SBA lender, because not all SBA lenders are created equal, right? And talk a little bit about what sets maybe the right SBA lender apart from just any bank, because they all kind of say, yeah, we do SBA, but doesn't mean they do it well. They don't mean it. They don't do it good.
I'll let them answer what PLP is, but
Yes.
one of the first things you want to do is make sure that they're PLP.
Okay.
Which basically means they can underwrite the deal themselves as opposed to sending them off to SBA.
Oh, so that would delay things a little bit?
Delays things tremendously. We have a deal
tremendously.
right now that's under that same situation, delaying it probably at least 3 weeks, almost a month. So
Okay.
if you guys maybe explain what PLP
Yeah.
is.
So give us the PLP breakdown.
Yeah,
Tammy.
absolutely. So if you are a preferred lender with the SBA, that means you've gone through a process that takes about a year or so, where you've worked directly with the SBA, shared with them all of the deals you're doing. They've seen everything, and they issue you preferred lender status, which means you can make your own credit decisions, underwrite all of your own loans, approve your own loans, close your own loans, as if they were your own loans. And
Okay.
the only reason that you would go to the SBA would for certain segments if there was something we needed to clear with them directly. The benefit to doing that is that you are working directly with the lender that is providing the capital backed by the SBA guarantee. If you're working with a bank that is not a preferred lender, what happens then is you have to go through the process of approval with the bank, which means it has to be underwritten, has to be approved through the bank, and then it has to go directly to the SBA. I believe it's a San Francisco office, or it was, for then them to go through the same process. And what happens in that process is there's a lot of back and forth, and there's one question that gets asked from the SBA to the lender, and then the lender answers the SBA, and then it goes back and forth and back and forth. And it can really put a 60-day window into a 6, 7, 8 month window.
Yeah.
That's
So-
a significant delay.
So when you
Yes.
are searching for the right lender, that is going to be your number one question to ask. Are you a preferred lender?
Okay.
I think that's super important for
Yeah.
people.
And I'll add on to Tammy. I think that start with question number 1, and question number 2 is, do you specialize in change of ownership and business acquisition? Not every bank that even is a preferred lender wants to finance blue sky, goodwill,
Okay.
what is needing to be
That's a good point.
financed as part of these change of ownerships when someone buys and sells a business. So a lot of banks, some of the top banks out there specialize in that, and working with a lender that is familiar with that helps the process go from 6 months
Right.
down to should be always under 60 days.
And some of them also have caps on the blue sky. Might be $1 million cap or $500,000 cap on the blue sky as opposed to the asset value.
So now most sellers are not going to have any idea what blue sky means. So let's clarify that piece for just a second.
Yeah. So blue sky, the way that we look at it, is the intangible amount of assets that are being acquired. That's the future cash flow. That's
Okay.
the customer list. That's not something that's tangible, equipment, inventory.
It's not a fixed asset.
Not a
per se.
fixed
Yeah,
asset.
yeah.
It's not-
Goodwill.
Not something on the balance
Goodwill.
sheet. Goodwill
Got it.
is probably
Got it.
the best.
Goodwill.
Yeah.
And to Tree's point, there are certain lenders that have caps on it. But I think another big myth about SBA financing is SBA lenders only finance small companies. You know, there are ways to finance businesses through the SBA program that has enterprise values up to $12 million these days.
Okay.
So it's not just for your small mom and pop. It's from them all the way up to kind of lower middle market, upper Main Street. So
Because you'll hear a lot of people say, well, the SBA limit is 5 million. Expand on that.
yep. So the SBA 7A limit
Got it.
remains at 5 million today.
Okay.
There are a handful of lenders out there, us being one of them, where you add conventional debt or shared lien position debt up to another $4 million. And there was just a release last week that you and I had talked about that got quite a bit of press with them allowing you to uncouple. That's the key word in that legislation or the SBA rule that changes. Uncouple the 7A from the 504. So if you do a 7A now, you still have the availability to do an additional 5 million of 504. 504 loans can only be used for real estate and long-term fixed assets.
Okay.
So
Got it. Tree, have you got any deals that are come to mind right now that you go, that one went really well with an SBA and this one over here, not so well?
Yeah, well, I mean, the reason I brought up PLP is because I have a deal right now
Okay.
that we got supposed to close in 2 days.
Yeah.
And we don't have an approval yet. And when talking to the bank, they start talking about, whoa, we're waiting on SBI. Wait, what do you mean? You're not PLP? You know, and so now it's going to be delayed.
And is that because the buyer chose that bank
Yes,
as opposed
yes,
to a
yes,
pre-screen
the buyer-
deal like we were talking
Yes,
about
the
earlier?
buyer chose the bank.
Okay.
They were sent to several banks that we referred them to. Found a local bank that he just walked in the door of the local bank and, you know, loved the guy he was talking to, but
Who said, yeah, we do SBA.
yeah, we do SBA. And when I talked to the bank representative, this is their second one. So they did complete
Yeah.
one.
Okay.
But this is their second one.
you
So,
don't want to be somebody's guinea pig.
That's
That's
right.
probably the largest
You're the
investment
experiment.
of your life.
Right.
Yeah.
Right.
And choosing the right bank does make a difference.
you know, and obviously the seller's unhappy about it as well because of the delay.
Yeah.
You know,
Sure.
So
Yeah.
makes for a
Now, was
difficult
that deal pre-screened by the broker to an SBA PLP?
Yes.
And
yes.
then presented that way to the buyer, but then the
Right.
buyer decided to go
Yeah,
their own direction.
in the package, the SAM, the
Yeah, sure.
pre-approval was in the package, ready to go, pre-approved. And it was an unusual deal. And one of the reasons I'm a little afraid of it with SBA is because it is somewhat seasonal. And so it's an unusual deal. And so not every bank's going to do it anyway.
Right.
And so I already had to search for a bank who would even do it.
Understood.
And now I've got SBA, you know, holding the strings, and who knows what they're going to say about the seasonality part.
I think that's an important point, Tree, too, that a lot of people, again, a myth, a misconception is that the SBA gives money. So the SBA is not the lender,
Right.
right?
That's right.
They're almost like an insurance company, right? And I liken it all the time when I'm talking to people as sort of like a private mortgage insurance, right? They're just the insurance avenue. So you've got your lender's criteria, and then you've got the SBA guidelines. So in choosing a lender, when you're choosing the PLP lender, that lender is the one that's actually giving the capital
Great
and that
point.
deal. It's not the SBA. The SBA does not lend the money.
Right.
So
And to your point, different lenders have different criteria
Right.
and their
That's
own
right.
appetite.
Yeah.
For example, some lenders don't like to do restaurants.
correct.
Some lenders don't like to do construction loans. Some love them. Some don't like to do franchises. You know, and you kind of got to search and a little bit know your business and who does what. And some of it's just trial and error.
Yep.
You know, so I will send it to you guys, for example, and you say, we don't have an appetite for that type of business, or yeah, we love that type of business. And over time, I know that,
Right.
you know.
Right. And to be clear, the majority of the time, what percentage of the pre-screening that you're doing is a seller coming to you versus an intermediary bringing a business to you to have it pre-screened?
You know, I would say traditionally it's an intermediary.
Okay.
That's a listing or a CPA, primarily business brokers
Got
that
it.
we have seen that opportunity to help structure that on the front end today, there are some businesses with searchers finding businesses directly where we might come and find a pre-qual, but the vast majority of them do come from those intermediaries that are assisting
Somebody's representing
the
a seller and
Yeah.
say, let me get this
Yeah.
pre-screened first, then we bring it to market. To your point,
Yep.
that broadens the pool a little bit because they're going to put that in the marketing. Like, this has been pre-screened. This is what you're going to need to put down.
And a lot of, Transworld has a lot of buyers that may be looking for a specific company that, when you bring that to market,
Yes.
you may already have that pool of buyers, which definitely helps to accelerate that.
And it
market
seems
share.
like there's not a lot of lenders who will pre-screen the buyer, but you guys will do that to a degree.
Love it.
Absolutely.
Yeah, you do.
Yeah.
Yes,
Yeah.
absolutely. Because we get it from time to time. Here's my letter from Live Oak.
Yeah.
Yeah. And I think it helps to root out challenges that you may face.
Okay.
We were talking about one earlier, but being able to ask some of those difficult questions where you may not want to poke or prod as heavy as we do to make sure that the information we're being presented is accurate, to ask the questions about where's the down payment?
Yep.
What's your experience? How do you plan to relocate? Why are you relocating? What attracted you to this business? But I think from a brokerage standpoint, definitely should help to diversify buyers if they come pre-qualified from a lending institution that does that.
Right. Can I add to that? There are a lot of intermediaries right now that are requiring buyers to get a pre-qualification before they'll even share the SIM.
Yeah, that's
Yeah.
right.
Before they'll even share the SIM.
Yep.
Get pre-qualified, and I'm happy to work with you because there's so many tire kickers out there
Right.
that just, I
And
hate to
Live-
say waste your time. but-
Yeah. And Live Oak's happy to start narrowing in those guardrails of like size, industry, location before they come to you all. So strongly encourage that for the buy side.
That's good.
Hey, Andy, do you know what time it is?
What time?
It's time for Deal of the Week.
Ring the bell.
All right, so here we are, and we're talking about the deal of the week. Andy, introduce us to T. Tell us a little bit about the story.
This is T. Patel, and T. Patel bought this restaurant from us, the Bistro, in
February
February.
of this year.
Yep,
February
yeah,
through
yeah.
Richard Murray, right?
That's right. Richard Murray was our broker.
Yeah,
That's fantastic.
So tell us about it. What'd you do before you got?
I'm in the hotel industry, hospitality, gas stations. We actually recently sold the gas station, which had a deli.
Oh, nice.
So I've been in the food industry for about 20 years. Richard reached out to me that I know you don't want to go back into food, but you've got to see this location.
Okay.
I was attracted by the bar and the location, to be
Sure.
honest, because we have family in aviation, beautiful views, and the bar. Actually, my wife fell in love with the bar, so I ended up purchasing it to go into fine dining. Never been in fine dining,
Excellent.
but it's been pretty good. We have a new menu launching in 2 weeks.
You have a new menu launching in 2 weeks.
2 weeks,
Okay,
yeah. So moving
excellent.
away from the previous menu, which will be
Okay.
great. But yeah,
What's one or two of the specials, the highlights that you're going to be featuring on the new menu?
the New York strip we're bringing into it. We have a ribeye. The chef is a Chilean-based chef, which is going to introduce
Chilean, okay.
pork chop the Chilean way, which is going to be great.
Love it.
Every week we'll have a different special, which he's going to create himself
Okay.
to inspire him. So
When did you first look at the restaurant versus then you closed on it in February? What was that process like and how long?
I'm a spontaneous buyer. I buy a lot of
Okay.
businesses, so I look
We
at
like
something.
guys like you.
We fell in love with it. We brought it to try it out. So I think we viewed it in December. We dined here a few times,
Yeah.
and then ending up putting an offer into about three weeks into it.
Okay.
Sure. And how many seats do you have?
85.
85. Do you
85.
have an SRX license or a full
It's a
CRP?
full, no, it's a full CRP, which is attached to the airport. So we can actually even sell liquor to the private jets, miniatures and stuff. So it's a very unique license.
Okay.
Hopefully in the next 2 months we can actually open for the full day, for a coffee shop theme, for a light lunch. So that's the target, is to go for a full day.
Yeah, we're getting a little bit hungry here.
That's right. Yeah. So right now it's a dinner spot.
It's just an evening bistro,
Okay.
open
Yeah.
5 to 9. But
Yeah, very good.
that's the whole place.
And did you use outside financing or just seller
no
financing?
financing. We
Yeah,
don't need
so-
finance.
Cash deal, seller
Cash deal.
note at all? Any seller financing involved?
No.
No.
Okay.
Got it. Yeah. Good.
deal.
Good.
T, you're an entrepreneur. This is your, how many? What,
I have 4 other businesses. I have
Yeah.
2 hotels in downtown.
Okay.
We have rental properties as well, which we have.
Okay.
And then I have a medical spa on 210.
All right. So he's a true entrepreneur.
Yeah, entrepreneur. He's got the entrepreneur bug. You've been bitten many times.
Yeah.
Yeah.
I think the wife's had enough now.
Yeah, exactly.
Very good. Very good.
Well-
Well, if you had to rate your experience with Transworld, Richard, the whole process, 1 to 10, 10, I would definitely do it again and tell my friends.
I would definitely. I
would?
would 100%. Absolutely amazing from start to finish. To be honest,
That's great.
Yeah, start to finish, guidance and everything was there. I cannot
Fantastic.
believe it.
Well, thank you for hosting our Deal Board podcast today.
No,
And
it's been a pleasure.
congratulations on
Thank
the
you.
acquisition.
Yes,
thank you very
Well
much.
done.
And anybody in the Jacksonville area or St. Augustine, right in between the two, you got this beautiful restaurant here. So give us your address. Tell us the name of the
It's
restaurant.
4900 US 1 North. It's actually located in St. Augustine Airport.
Yes.
So
Plenty of parking.
plenty of parking on either side of the airport.
And it's Hangar 1 Bistro.
Hangar One Bistro,
Yeah.
airport views, and I mean, it is beautiful in the evening.
What's the phone number if they want to call and get a reservation?
904-603-6003.
Excellent.
Very good. Well, that's our deal of the week. T,
Thank you very much.
Thank you.
Pleasure.
Deal of the week.
Thank you very much.
Thank you. Thank you.
guys. Thank you.
So for the sellers and the buyers, let's go back to the seller because you said the number one thing would be the financials. Like we got to make sure that they're clean and they're current. That's what I heard, right? What other things would be most important at the top of that list to be able to bring the right package of information to you to get a pre-screening?
I would say concentration, understanding your revenue mix,
Okay.
understanding your sales channel mix.
Got it.
Is the seller the rainmaker? Is that company seller dependent?
Got
I
it.
think is important.
Yep.
I would say on top of that, Tammy, what else would you add?
I was really just going to say that the seller's involvement, we hear a lot, and I'm sure you do too, oh, we did not really hear that much. And then come to find out a little bit further down the road that really he's, doing a lot of the front end work, might even be the head salesman.
That's
And
right.
so that could be
Everything's really dependent on that person. Now,
Potential
what happens when they walk out the door?
exactly.
Okay.
Exactly.
Understanding the third party components of this, be it vendors, suppliers, are they going to provide the same sort of terms that can change the cash cycle? We've had some deals blow up in the 11th hour where landlords won't provide an extended lease or that lease rate changes substantially.
One of the other things that I see going back to the buyer part of it is if a buyer has extensive personal debt, it can blow out your debt ratios for the business.
That's great.
I can't tell you how many times we've lost deals because the buyer went out and bought a motorhome 2 weeks before, and now they're
We're just talking about
their debt service is now their debt service is now
Can't do that.
things like that. So talking to the buyers about being fiscally responsible before they get their loan is always important.
And we do try to coach them to your point, Treve, of how much income do you need to take out to continue the lifestyle you have and pay for your personal liabilities? Because that can be a big difference compared to what the seller might have been taking out and a new buyer might need to take out.
And last 2 points, let me just ask, when they do come and the buyer presents and says, here's my proof of funds, this is what my down payment's going to be, how much do you want them to have after that? How much left over? You follow my question? Yeah.
Yeah, I don't know that there's an exact number. I think a lot of times it can be deal specific.
Okay.
Depending on what type of business they're buying, what kind of working capital.
But you don't want to exhaust
You do
everything.
not
No,
want them
sure.
to have their entire life savings put into
That's the point.
business.
Yeah, there's not a specific amount. Some
Got it.
lenders do say they want to see 10%. That might be a little high, but
Mhm.
I think that like to look at is do you have funds that'll get you through a bump in the night? Because there's bound to be one.
Got
Do you
it,
have a
got
little
it.
bit of rainy day fund available on that? And I think that's tough if you're raising all your capital from investors. How likely are they going to be to put in more capital? So being able to have some personal funds and some personal wherewithal, we feel is really important to the success.
And if the seller is not currently taking a salary themselves, is there a certain seller salary that you're going to assume the buyer needs to be able to cover? To your point, they need a livable wage beyond the debt service, right?
Yeah, when we're doing like just a pre-qualification of the business for you. I try to use like a round number, like around 100,000, and that will kind of put us in a nice little sweet spot where if we need to go a little bit lower or a little bit higher, it may not be as detrimental to the business.
Okay.
Depending, of course, on the buyer.
Sure.
So that's typically a round number that I use that gets me as close as possible. And usually when I'm pre-qualifying a business for one of you folks, I'll let you know what I have used, just so that you are aware
Fair.
what we've made the assumption that the buyer needs
And
to take.
that number is going to vary depending on, is it a $300,000 auto repair shop or is it a $9 million logistics and company on what the level of those executives, and then when the valuation company, they base it off of the statistics from the
For
labor
that industry?
Yep.
Okay.
Yeah, based off
Yeah.
the NIAC code on their labor bureau.
The one other problem that I see more than I would like is the seller, once it goes under contract, takes his foot off the gas.
Right.
And all of a sudden we get interim financials 2 months into the process and sales are down 50% because
Yeah.
they didn't go out and do new sales because it was to be a takeover. And then all of a sudden the deal blows up because,
Yeah.
because the seller takes their foot off the gas. So one of the things I do is I lecture them about you need to work harder. Right until that check is in your pocket.
All the
You
way
need
to
work
the end.
harder
That's right.
Than you ever have.
That's
right
right.
now.
That's
Do
right.
not take your foot off the gas.
To your point, you were asking about what documentation, work in process, backlogs, those are really key for any type of project-based company to be able to see, if you can't sell it today and get paid today, then, if you're working off of project-based work, being able to understand, does our buyer have backlog that is in line
Sitting
with
on the
what
books
you
now, so
had
when they
the
take
same
over.
period
Right.
prior year,
Right.
because it takes time to generate those sales.
And are you going to normally have some sort of working capital consideration that you put into the project for them?
Absolutely.
Yes.
Yeah.
Because you want to make sure they keep going
Yeah.
from day one. when
Yeah,
they
if
take
there's not a negotiated pay amount,
Yeah.
depending on the type of deal, we
Yep.
think it's critically important that our buyers have access to both permanent working capital and revolving
Revolving
working
too.
capital
Okay.
to be able to make it through that cycle and a little bit of bump in the night.
Yep.
So
That's
Yeah.
good.
Right.
Well, good topic here.
For sure.
SBA, yeah, and what they can do to prepare to make sure that they bring it to market the right way, how the intermediary and the broker can help in that process as well, and then a little bit about the buyers
Yep.
and what they could be expecting. Treve, follow-up comment?
I think that's about it. I think you did a great job, JT.
I
Yeah.
appreciate you guys being here. Thank you, Tammy.
Thank you.
Thank you very much, John.
we appreciate
Thank you,
the
Live
opportunity.
Obey. And thanks once again for the folks here at Hangar One Bistro for hosting the Deal Board podcast.
Thanks for tuning in to the show today. If you like the podcast, share it with your friends on social media. And don't forget to subscribe and leave us a review on your favorite podcasting app. If you have questions, would like to appear, or have suggestions for topics for the show, get in contact with us through our website, thedealboardpodcast.com.